83, 92, 4,000, 11, and then 21. Support below at 62, 54, 46, 32, and 22. Pivot 74, support 62, 54, 46, 32, and 22. Resistance on the upside at 83, 92, 4,000, 11, and 21. All right, now today the market's going to react to not the best FOMC meeting that you heard, and basically it really didn't change anything. Since the last time they had this meeting. As we quickly push up here, we got a little resistance around the 83 area. We'll talk about that in a minute. See what the market wants to do up here. We also had retail sales come out this morning, which was a little bit of a miss as we quickly come up here to the 83 again. Whatever you do, keep your stops in place. So that was a little bit of a miss this morning, and they were expecting. I'll get those numbers in a second here. Let's work on this. All right, nice rotation here against our 83 area. There we go. A little bit more. Okay. Again, if you're scaling in, scaling out, obviously you need to do that as well. When you scale in as well as scaling out, that way you take some profits off the table and then see what happens with the rest of them. And then if you have to, you just adjust on your stops accordingly. This is, not everything is just straightforward. If it was, we wouldn't be traders. You can let a machine do it for you, but we'd like to trade every day. So consequently, you have to adjust your scale, or you do or you don't. I don't know, depending on if you are scaling or not. And then adjust your exit strategy accordingly. So, all right, we're working this 83 area a little. If you didn't get out on a little dip back down to 80 and change, got down to 80 and a half there and rotated back up. So we got quick 2 points on that. Trying to get a little bit more here, but there we go. All right. All right. All right, so we got a nice little rotation here against our 83 area. Just took minimal amount of heat there. And now if you have any left over, you just have a trailing stop with anything left against the 83 area. Again, if anybody has any questions, feel free to ask in the chat. We are scalping many S&Ps here based on the levels we just gave out, and we'll show the levels in the chat here in a minute. If you bring up the chat, you'll see the levels. Those resistance areas are obviously areas of the market we feel might have a little trouble popping through right away. And if we do, we can try to take advantage of those ebbs and flows of the market as they present themselves. All right, nice rotation there against the 83. Again, if you are scaling out, you're trading multiple contracts, this is where you can take a little bit more than 2 or 3 points on these trades. And that's all the stops and what your profit targets are all determined by volatility on any given day. Every day is different. So if you get short up there, this is where you want to probably cover them here against our pivot, or if you want to try to stay short, you can obviously do that with the trailing stop. And this is a way of taking more than 2 or 3 points against our level. And again, everybody here trades differently. Nobody here trades the same way. You have to understand your risk tolerance in regards to trading. You understand how many contracts you trade, how you manage those contracts, how you enter, how you exit. All that's dependent on each individual's risk tolerance, as you can imagine. So that's, again, Nice little opportunity here. The support level on the downside we have is up down at 62. That's our first support level that we have. So let's see here. In regards to any numbers coming out this morning, nice little trade there if you did get in and managing to stay short. We did have retail sales come out this morning. Let's see, the expectation, I think, wait, I got it here. Just a second. Expectation on the retail sales number was minus 0.2, came out at minus 0.6. If you exclude autos, expectation was to be up 0.1, came down minus 0.2. If you take out auto and gas, retail sales, they're expecting flat, came out at minus 0.2. So a bit miss all around as far as retail sales was concerned. And industrial production was also the other number that came out. They were expecting flat, came out at minus 0.2. And at 9 o'clock here, we just have business inventories coming up at the top of the hour, so a smaller number. So we'll see how that manages. So again, we are trading, and if you look at the chat, you'll see the levels there that we just put up. Those are levels that we're using as a guide to the day. We can tweak those, we can adjust those. You can see our first resistance area there at 83 worked very nicely, and the market came off of that quickly. So you were able to hopefully manage to take a little bit off of that opportunity. All right. And so we have support now at the 62 area. That's our first support level. As widely expected, the Federal Open Market Committee increased the policy rate by 50 basis points to 4.25 to 450 on Wednesday, as it downshifted from 75 basis point hikes in its previous 4 meetings. While that would appear to be a win for investors, the so-called dot plot was more of a concern. Fed policy medium projections now sees federal funds rate rising to 5.1% next year, level not seen since 2007, compared to the 4.6 in the central bank's September projection. So they came out, they said they made that 50% basis point move, and then they saw that number that they were expecting 5%, then that kind of wrote the market down. So even though we had a good inflation number on Tuesday, the Fed came out, basically did the 50 basis points, but then also said that their target's a lot higher as we quickly come down here to the 62 area. And the market continues to downtick. We just have one number coming out this morning. We had a small number. I mean, we had a couple numbers come out already, which were kind of market moves already, as you can see, as we are coming down here. We get a little support down here at 62. All right, got down here at 64 and popped it right back up again. We are looking at the 64 area, but you have to be a 62 area, I should say, but you have to be a little bit mindful of the fact that we just got down to 64 and rotated back up. So that's a little bit more tenuous right now than if you went down there right away. So be a little bit careful depending on your risk tolerance, how you adjust. Maybe you adjust a little bit downwards. Maybe you don't trade as many contracts. Maybe you just cancel the level. Okay, so it all depends on your risk tolerance and how you are going to trade as a trader. So that's you know, everybody's here got different risk tolerances, so you have to make those adjustments according to what makes you comfortable as a trader. So if it's but what we try to do here is we try to explain the risk, and then it's up to you to make those decisions independent of anybody else. So we missed it by just a point or so. So you have to make that determination. Maybe it's a little bit more riskier because we would have liked to have it on that first rotation down. So you have to make that decision now. Maybe adjust your entry points, or maybe cancel the trade and look for the next level on the downside. Let's see. We need to be honest with ourselves that there is inflation. 12-month core inflation is 6% CPI. There are three times our 2% target. Now it's good to see progress, but let's just understand we have a long ways to go to get back to price stability, said Powell during his press conference. I don't think anyone knows whether we're going to have a recession or not, and if we do, whether it's going to be a deep one or not. It's just not knowable. It's not knowable. I'm quoting: the historical record cautions strongly against premature loosening policy. We will stay the course until the job is done. Okay, so all of these things are not, they weren't the talk, and you can see here the reaction was not too positive, and it was very volatile yesterday, as you can imagine, ripping around all over the place. But for the most part, at the end of the day, to the downside, and we open up lower. So the market reaction, like I said yesterday, the opening and then the selling off was very bearish, and they continued with the bearishness right now. So it's not, market doesn't look good as far as it from a technical point of view. All right, anyway, right now we got little support at 62. It's not as strong as it was a little bit ago, so make those adjustments accordingly. If anybody has any questions, feel free to ask in the chat. We don't mind questions here. If you have any questions about how we do things or what we're trying to do, let us know. All three major U.S. stock indices retreated following the announcement of erasing gains from earlier in the session. By the end of the day, the Nasdaq slipped 0.8, the S&Ps and the Dow 6.6 and 0.4% respectively, while more losses are in store in this morning. Rate hikes are tricky to sense the monetary policy makers may know for another year, may not know for are tricky in the sense that monetary policymakers may not know for another year if they're tightening too much or not enough. That's right. They got to get these things through system, right? So we have to wait till, it's a good thing they're slowing down, but we'll see if, the inflation is still there or not. It's going to take some time for it to rotate through. Don't know yet, Casey. Question was if we were going to be closed between Christmas and New Year's. Definitely, might give you some levels, but definitely not going to be staying here most of the morning because it's going to be very, very quiet. Again, unless something happens, right? But who knows? All right. Well, now we got down to 63 here again. It's kind of tough to say if you left your 63s in there because we adjusted a little bit. So, I mean, I took my 63 out, so I did not have it anyway. 48 contracts traded down there at 63. So, obviously, right now, I would say that the 62 area not too valid. I would probably not be taking the 62 right now because technically it kind of worked as it got down to 63. And again, unfortunately, 63 was the number. We had 62. I always take the safer bet. And but hey, sometimes we're going to miss it a little bit, but you have to just make the adjustment accordingly, and then look for the next opportunity. So I'd be looking down at the 54 area next. This is what I mean by tweaking those levels. Even though we have those levels out in the chat, we definitely can adjust those or tweak those based on the price action, and this is one example of that. All right, they come down here again. Again, if very aggressive if you're going to take this right now, or wait till the 54. Everybody here trades differently, so I'm not telling you not to take it. I'm just telling you that it's a lot riskier than it was a minute ago. And it's moving around, as you can see. Got down there, and if you did jump in, you got nice fill and nice quick rotation. There's pressure here again. Market that's the Federal Reserve decision to reduce the pace of rate hikes to 50 basis points marks the beginning of the end of its rate hike cycle, said some analysts. However, a reduction in pace of rate hikes is not a pivot. The Fed's quantitative tightening program is likely to continue for foreseeable future, with the Fed tightening into a deeply inverted yield curve. The near-term environment should be risk-off. Hence, the equity markets could see increased volatility in the upcoming weeks. Yeah, I mean, basically volatility, what he's talking about is the sell-off. It's the volatility that he's looking at. Simply because the bond market, I keep telling you, is telling us one thing. And, that was good. Everything was good news today, this week, last couple of days, right? Retail, the whole inflation numbers was good. They raised 50 basis points only instead of 75. That was good. And look where we're at, right? Not good, not good as far as technicals are concerned. But again, here I'm giving you the bigger picture, but we are trading based on scalping. So we talk about the bigger picture, but we're trying to find areas that we feel that give us opportunity. And we're trading equity futures, so many S&Ps. That's why we talk about stock market. So Casey, the question about close during Christmas and through New Year's, I don't know if it'll be closed, but definitely maybe just give you levels and, then just tell you not to trade. It's very slow. I mean, I don't know if anybody's considered those. I mean, for one person that always used to go into work, I used to even take some time off between Christmas and New Year's. All right, Philip, you have a great day as well. All right, market continues to slowly downtick here. We're looking at the 54 area next. Very, very tough little trade here again. The bigger picture is kind of bearish, but you saw yesterday, even though we had a bearish comment and everything, the market, had some big rotations, right? I mean, they got down to 39.97 and rotated all the way back up to 72 before they came back down. So it's very, very tough little trade, no matter how you slice it, right? You get, even though the market is trending, you have an 80-point rotation in the middle of the day, kind of make it tough to stay with any one kind of position, right? I mean, for normal traders, who's going to take 80 points heat? That's a lot of heat. And so that's why we kind of stick to scalping the market in areas that we feel give us an opportunity to scalp, and not try to worry about the bigger picture. Just find, even during that big rally yesterday, there was opportunities to trade as well. But again, everybody has different risk tolerances, so you have to take that into consideration. All right, market very, very choppy here. I mean, just even though we're down ticking, look at these moves are insanely quick, right? We have support down at the 54 area. Obviously, if somebody here looking to get short, you could do that, but around 71, 72. But keep your stops in place. I mean, the thing is, it's just getting a little bit volatile here. Probably having to do at least 3 to 4 points on your stops. And you're getting those rotations on your profit targets as well. So it's not like, I mean, when we were really, the markets were really crazy a little bit ago, you were at, we were 6, 7 points on the stops in our profit targets. So all right, let's see here what else we can talk about. All right, market slowly down ticking here. Got down at 57. We're looking at the 54 area. We do have a small number coming out here. Business inventory is coming out here at the top of the hour in about 5 minutes. So again, we don't like to have any positions on when numbers are released. Just kind of my thing. Doesn't mean that you don't. It doesn't mean you have to. VIX is a 22 handle only. Thought it'd be a lot higher, right? Wasn't it like 22 the other day when we were trading higher? All right. Again, looking at the 54 area there, and we got down to 57. Still looking at the 54 here to give us a little bit. What? Doesn't make any sense, Don, does it? Right, we're getting a little choppy here, getting a little nervous, but we got support there at 54. See how it wants to manage that little opportunity there. Again, whatever you do, you keep your stops in place. All right. All right, coming down here to the 55, 54 area that we have. All right, working as 54 again. You can always adjust to manage some of your trades here. If you don't like the price section, it's giving you a chance here to exit some of these. And came back up there, giving you a chance to get out. If you don't like the way it's reacting around your area, you can always adjust that, right? Okay, next underneath we got 46 here, so a little bit tight in this little area here is a little bit of support. All right, nice little, again, if you don't like the price action, you can see if we can't, you can exit some of your contracts there that you have at, you bought at 54. We gave you that earlier when it got back up there. Again, you can always adjust a number in about a minute and a half here. So again, if you have it, still trading that stuff, still have some on, just make sure we get out here before that number, even though I don't, obviously you get stopped out, that's another story. But if you don't, I don't like to have any positions on when numbers are released. Next level down below here is 46. So you have to be careful here because we do have a number coming out. All right, gonna be flat now, even though we're working this 40s. You got to be careful here with these numbers, even though it's not really a big number, but I'm just not liking. I don't like to have anything on when these numbers are released. Yeah, we talked about the extra volatility here and how you're going to have to expand your stops just a little bit to take into consideration the volatility here. So if you're working this for you, the number is out right now. So I'll again give you a chance to exit there at 46 if you had anything on. But like I said, I don't like to have anything on when these numbers are released. And kind of hanging here on these lows here. Next level on the downside, we have is down all the way down to 32. Again, have to work these a little bit because they did not really give us that quick rotation. The 54 was did not really work, but gave us a chance to exit some of that stuff. Again, you don't have to keep your stops in place and get filled. You can manage those trades if you don't like the price action. I was suggesting maybe get out of some of your contracts there at 54 if you're trading multiple contracts, only because we didn't like the price action at that time. And then it did this, then it came down to 46 there, and the number was going to be released. So I was like, okay, you have to be quick there and try to make that adjustment to the trade as you're trading, right? Again, this is, we are hands-on here, and we have to deal with volatility, and sometimes volatility is injected in this 5-minute bar, right? So you have to manage those trades once in a while. Not everything here is, like I said, straightforward. All right. So we're hanging here on the lows. Market again, not happy with yesterday's release of its commentary with the FOMC, even though the inflation numbers were good. So it's again, we had two kind of bullish situations and not market acting negatively to it. Very bearish kind of reactions, bearish kind of trades in the market. Next support level is down at the 32. Let me give you some levels here below. We got 32, 22, and then 10 and 39 even. I mean, just to think, we were at, where was that high on 2 days ago? Hit the 40, almost 41.90. And now we're here. So nice move. We continue to down tick, coming down here to the 32 area. That's our next support level. Again, we have 32, then 22, 10, and then 39 even. All right, so that's all the numbers that are out. Business inventories came out, and then that's about it as far as any news today. And those you can see in the chat, we have those additional levels that we just gave out. Usually when I give out additional levels one way or the other, that's the end of that break or rally. So we'll see if that happens here today. I don't know. All right. Support down at 32, got down here to 37. Market's a little slippery and trade it accordingly. Okay. You always gotta, understand what's going on. If the market is putting a little bit too much pressure on one way or the other, you can always exit, or if you got in, you can always get out for scratch. There's nothing wrong with a scratch sometimes. Scratch meaning you bought it at 54 and sold it at 54. As we continue to downtick, looking at the 32 level next. Very, very slippery and very, very volatile. As you can see, they've definitely added some more volatility into the market here. Not surprising. We did get down to 33.5 against the 32 that we had, and 160 traded down there. Maybe you were able to scale in. Again, you have to adjust your scale based on volatility. We've talked about that earlier, that we have to make. We already made an adjustment there to we're at 3 to 4 points on our stops and profit targets. You could probably go 4 to 5 at this point, especially if we continue to downtick here. Consequently, you're going to have to also adjust your scaling a little bit, because we are getting more volatility into the market. All right, well, we got down to 33 and a half down there against our 32. Again, depending on how you're scaling in, you have to take into consideration the expanded volatility here as the market broke off here in the last 15 minutes. And they injected a whole bunch of volatility. You have to make those adjustments accordingly. And again, if you did that, maybe some of you adjusted underneath on your scaling. Maybe you didn't. If you didn't, then obviously the 32 is a little bit more risky right now. All right, they did go pop down to 33 and a half, then it rotated back up again. We had support there at the 32 area. And remember, we give out levels, and levels are considered areas that we have to think about. and that little area down there is, again, it's above and below. You have to consider support or resistance. And again, some of you, we talked about scaling in and the added volatility here that then was injected into the market, and we're trying to make those adjustments accordingly. Again, the volatility market was pretty okay, and then all of a sudden they just kind of picked up the volatility here in the last 15-20 minutes as the market probably hit some stops there. Now, we're not always like going against the trend. We need the market to kind of set us up for an opportunity to have a momentum trade. We need the price action to set us up for those opportunities. So, unfortunately, the way the market's trading at this moment, we didn't have any such a setup. So we had to just kind of deal with where we were at. All right, market here kind of found some legs down there at around the 30. We had 32, came down to 33 and a half there, and then rotated back up. Right now, I would say there's some resistance around the 65 area on the upside. That's what I would look as far as some resistance is concerned. At 65, little resistance. Next support level, obviously the 32. We kind of missed out on that. You can see there in the chat. Next level that we have is down at the 22 area. Even though they're kind of far away, I would just be patient and wait for those opportunities instead of just trying to catch one of these interim moves here, because it'd be very hard to do with the way the volatility is. All right, market trying to get a little bit of a rotation back up here. I don't know if it's going to happen or not. All I can say is we have resistance around the 65 area and support down at right now at 22. I would kind of wait for those areas instead of trying to jump in here and try to figure out where this thing's going to go or stop or not. Okay, very, very choppy here. You got to see it got down to 37, pop right up here to 43. Chop, chop, chop. Now we get into this choppy mode, very tough to trade. You got to be patient and wait for opportunities. All right, market pocket jumping back up here a bit. Little resistance around the 65 area. Support down at 42 again. Right now, this is no trade zone here. I know it's a big area, but we're getting some volatility, and you have to be patient and wait for good opportunities instead of just jumping in. All right, market popping back up here, touch. Looking at the 65 area as a little resistance. And whatever you do, make sure you keep your stops in place. Again, if anybody has any questions, feel free to ask in the chat. We don't mind questions. All right, we are chopping around, got up to the 46.7 area, and then rotated back down here a little bit. Again, this is a no trade zone area that I like to call because it could definitely pop back up. It could go back down. It's chopping around. You need to find a good opportunity. We average about four, 4 or 5 trades a day. That's what we're trying to do here on a everyday basis. Obviously, when you get more volatility, you're going to get more opportunities to trade. And we easily got, well, 4 or 5 trades a day. I had to work, well, we had a nice trade top off the morning there with our upper resistance area at 83, and then the market kind of just sold off here. Not right away. It kind of hung there for a bit and then sold off. And then now we're just kind of hanging here in this little range. Again, if anybody has any questions, good time to ask. There are no other numbers coming out this morning. All right, little range bound here. Again, we can only trade what the market gives us. Sometimes it just gets into this back and forth, doesn't give us too many opportunities. That's fine. We were kind of busy this morning with this little rotation here to the downside, and now we just got to wait and see what happens next. All right, we're kind of rotating back down here a little bit. Next support level we have is down at the 22 area. Again, we had 32, but because we got down here to 33 and a half, it's a lot more riskier right now.